Hello everybody, welcome to this week's live stream. I'm David Jones from Capital.com and we run these normally every Friday at 2:30 UK time, just as the US markets are opening, just to explain how they work. We take a quick look at some of the major announcements to watch out for next week, then spend most of the time going through the markets. So we look at stock market indices, gold, silver, oil, FX pairs, and Bitcoin, and just a quick look to see where perhaps which of the markets might be interesting to watch in the week ahead. I've got the S&P. It's a big week this week. There's a lot going on this week with that US interest rate decision, 75 basis points as expected, but it was more around the press conference afterwards. And we've seen, if you look at the S&P, we'll look at the Nasdaq as well in a sec. Driven back up to levels not seen for about 6 or 7 weeks, these markets. So we'll come back to those in a sec. Let's just do the risk warning first. This presentation is only for educational purposes. This presentation does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.9% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, quick look to next week. There's a lot going on next week. It's August next week. Monday the 1st, US manufacturing PMI. So factory gate inflation. Tuesday, Australian interest rate decision. Thursday, UK interest rate decision. And if that wasn't enough, Friday is the non-farm payrolls, the US unemployment numbers this time next week. So yeah, we'll be doing a live stream next Friday. So that'll be an hour after the payrolls. And then I'm going on holiday for a couple of weeks, so that'll be the last one for a couple of weeks. So it'll be interesting. There's a lot going on next week. Quick contact update, and then we'll get into the markets. Of course, to find out more, go to Capital.com. Any questions, drop me an email, david.jones@capital.com. You can follow me on Twitter, @JonesTheMarkets. You can find out more about my trading approach and the training course I run by going to jonesthemarkets.com. And you can follow Capital.com on YouTube, Twitter, and Facebook. Okay, let's get into it. So, the big thing this week was the US rate decision on Wednesday night. So if we go back, look at the S&P. So that was about, where was it? What was the date on Wednesday? 28th, 27th, wasn't it? So it was here. So we had a bit of a wobble when the rate decision came out. But I think there was a few things that the Fed chairman said that did seem to be well liked by investors. We heard him say that, rates were still going to go up, but perhaps not at the pace that they first thought. He also said he didn't think the US was in a recession. And then, of course, the very next day, Thursday, we had US GDP, which showed a contraction, a shrinkage in the second quarter, which show we've had 2 quarters of negative GDP now for the US. So it is in recession. Technically, it's in a recession. I think other people are pointed to saying, well, unemployment isn't high and all of that. But the definition of a recession is 2 quarters of shrinking growth. And we've got that in the US. But markets are pretty unfazed by this. Really good rally in the S&P. And I think it's interesting. I did wonder, I remember saying this time last week, is this the week where the market starts to roll over? And clearly it hasn't. We saw a little bit of a sell-off Tuesday, Wednesday, or Monday, Tuesday, but we were seeing, a strong couple of days. So I think stock markets are really interesting now. For me, the big level to watch on the S&P are these old highs, May the 30th highs, around 4,200. So for me, I would still be looking to sell short when this thing runs out of steam. I did a video earlier this week. When was it? Was it yesterday on the Nasdaq? Or maybe the day before yesterday, and I did put a short in on the Nasdaq that got filled because I did wonder, is the market starting to run out of steam? But I've still got a long Dow running that's up about 790 quid. So I'm still long that market, and I've got an old long on the Nasdaq as well. But I do wonder up here next week, do we see these markets roll over? Or if we don't, that's it then. We're off to the races. You know, we've all got to start buying the dips again because markets are going to go back to the moon. Let's see. Let's see what happens. But I do think with the S&P, yes, absolutely, the trend for the last 5 weeks is up. But before it made that low for the year, which was only 5 weeks ago, it struggled in this 4,100 to 4,200 area. So I think if the market is going to run out of steam, then we're getting close. So it'll be interesting next week. Same thing for the Nasdaq, of course. Here we go. So the Nasdaq again, if we looked at the last 5 weeks, 6 weeks, trend is up. So from a short-term point of view, arguably still to be a buyer of dips. But if we go back to December last year, trend is down. So we have these, I can't even think of the word, converging trends. That's the word I was looking for. And again, for me on the Nasdaq, the reason I did the short trade whenever I did the video this week, these old highs, early June highs, ahead of 13,000. The market poked up to 12,933 yesterday. It was 12,943 in June. So for me, if I really thought the market was going to go down from here, it's a great place to go short because there's an obvious place for the stop. I think I put my stop on that existing Nasdaq short. The stop is in at 13.3 on that Nasdaq short. So we'll see. We'll see what happens. But I do think that we're going to see markets roll over next week. But let's see where we are. See how right or wrong I am in a week's time. If you look at the FTSE, I mean, the FTSE does its own thing anyway, doesn't it? I mean, the FTSE is just stuck in this big range. It's been stuck in all this year. You know, the FTSE's broken out, actually, through the June high. So the FTSE looks a bit more bullish because we're breaking out. But it's still fairly directionless, the FTSE. I must admit, I never look at this market for myself. And if you make money from it, then that's great. But for me, it's a market that doesn't appeal too much because of the sidewaysness that's been going on. But we've got, you know, clear support resistance levels there in the FTSE. The DAX, I would argue the DAX is probably the more bullish of all of them because the DAX hit the low. This is the German market, hit the low in March, came back to it in July, but we didn't get anywhere near the sort of push through that we saw in US markets. So you could make the argument that the DAX has already made a base. I mean, I'm still trying to buy a dip on the DAX. I think I was complaining last week that I missed the trade. If we get a bit of a sell-off next week in the DAX and these old lows at 12,400 hold, I think that could be an interesting trade. So stock markets next week, still strong into today. I think we're going to see some nerves coming back. That's the summation on stock markets, but we'll see what happens next week. Dollar index now. Dollar index. So the market, the all-conquering US dollar, that for the last 12 months and more has been moving higher. Obviously, quite a bit of volatility this week because of that interest rate decision. And, you know, just today, it has pushed to its lowest in about 3 weeks, 3.5 weeks. I would still be a buyer of dips on the US dollar. I don't think the interest rate meeting this week has changed the outlook for the dollar, and we're going to see it crash. So for me, absolutely still be inclined to be a buyer of dips. Not today, because the market has made a fresh low for this down move today, but I do wonder, we got this trend from Feb, so we're 5 months into that now. We've got the bigger trend from May. For me, looking to see, can the dollar make a base somewhere, give us a sensible place for a stop loss, and look to buy in to this dollar trend again with a target of the old highs, 109. So about 270 points higher than here. We'll see. We'll see what happens. So, but not surprisingly, a bit weaker this week. Pound against the dollar. Pound against the dollar. Look at that. It's really turned around today. Turn round right on that trend line. So that trend line is from February of this year. But of course, if we go back, the pound has been falling since June of last year. And that's a big range today, isn't it? What's the range been today? 22.45. So nearly a 200-point range for the pound today. So I wonder, is this move today the start of the pound rolling over once again to have a look at the 118 lows from earlier in July? Because that trend is still down, as you can see on the chart. Richard's just updated our inflation, UK core CPI, 4.8%. year on year. Okay, I wonder what the expected number was for that. Let's have a quick look on the old Twitter to get that up in the background. It's quite an interesting turnaround that is on the pound. Just look on the old 5-minute charts. Of course, the big news today in the UK is the Wagatha Christie trial. Let's not worry about US inflation when we've got the results of the Colleen Rooney and Miss Vardy, whose name I can't remember. That's really got hammered today, hasn't it? Since 11 o'clock today. That's really got clobbered. I could be tempted to be a buyer of the pound here because it's quite a big move on the day, isn't it? From 122.40. I wonder if it's been overdone. I suppose an aggressive trade here, yes, the medium-term trend is down, or the longer-term trend is down, is to be a buyer of the pound. Should we do that? Let's do our trade, our first trade for the day. So what I'm going to do here, so this is a 5-minute chart. So this is going to be, it's quite a short-term trade. And it's, so in the same way it reversed off the daily, the big trend, we do have a trend in the pound that's been chugging along for 7 days. Okay, and I wonder, will it have at least another look at 122? So maybe that's an interesting trade to do. Where's my stop going to go? How low has it been? 120.60. Let's say I'm going to go 120.30, okay? So I'm going to put 120.30 as a stop. I'm just really wondering, has the market overreacted a bit? We normally risk about 100 quid on these trades, don't we? Here we go. So I'm going to buy 25,000, where it's trading now, stop at 120.30, just to see, has the market been a little bit pessimistic for the pound? But it doesn't change the bigger picture, which is where the trend is still down for the pound. So it's another interesting one to watch next week, isn't it? Watch that one. Richard's saying 4.7% was the expectation for inflation. Thanks for that. 4.8% was the number. So, okay, worse than expected. Not horribly worse though. I do wonder, are we getting past peak inflation? I really, we're seeing commodities taking a hit. I think the economy clearly is going to still suffer, but I wonder if we're getting to the point now where it's past the worst. Only time will tell. But that's pound against the dollar. So for me, still a bit weak. Trend is down. Euro dollar. What a boring week for the euro against the dollar. So we're trading at 101.50, which is pretty much where it was 10 days ago. That is dull, isn't it? So we've seen the market, downtrend in the euro. Nothing's changed this week. I wouldn't trade that market. It looks too boring at the moment, to be honest. But if it rallied from here, perhaps you'd have a better opportunity to go short. I think pound against the dollar looks the much more interesting market to me, and of course the dollar index as well. So not much going on with euro dollar. Let's have a look at the dollar against the Japanese yen. It's come off, isn't it? So that's come off. But again, we are seeing yen strength, dollar weakness. But I would still be waiting for the dollar to snap back and this thing to move higher. But again, not today. It's interesting. It's pushed down sharply and rejected those lows, isn't it? So I think that 132 area could be an interesting one to watch next week. I would still be leaning to be a buyer of the US dollar. So another interesting one to watch next week. Let's take a look at gold and silver. This gold market has got a massive move on. I think I did a video, I can't remember when I did the video, in the last, about a week ago for gold. And I think I said in the video I wanted to buy it, but the trend was still down. And what I actually did was put an order to sell if it broke below these lows, just in case it started falling off a cliff. Since then, we've seen this, this is a big move, relatively speaking, for gold. 21st of July, it traded down to 1680. Today we're at 1757. However, which way is the trend? So I do think there's a good chance we'll see gold build a base down here, right? These big levels going back to April 2020. So we've come near this month to nearly 2-year lows on the price of gold. So if it's going to build a base anywhere, it's here. But the trend is still down. So I just wonder, is there going to be a bit more back and forth? So I would quite like to be a buyer of gold down here, but I am going to be patient and I'm going to wait to see, well, okay, if it starts to sell off from here, which it probably, it will probably sell off at some point because that's what gold has done for the last 4 months. Where does it stop? Do we get a higher low? So I think that is going to be interesting to see what happens there. I don't think I've got a trade on gold in here. No. Silver, most boring market in the world. Silver. That's rallied really strongly. This is why I hate silver. You get a trend and then it suddenly just reverses it. I mean, that's quite a positive move for silver. Saying that, silver always does exactly the opposite of what I expect it to do. So if I say that's a positive move, you should probably sell it. So it's trading at $20 now. It'd be interesting again next week. If it starts to sell off, where does it hold? Does it hold above the $18 lows? If it does, it starts to look as if this downtrend since April is over. So we'll see. We'll see what happens there. Yeah, that's silver. But that's a trend line break today. So again, let's see if it sells off next week. Where does it hold? Let's see what happens. And oil. I did a video on oil this week. This guy, I do read the comments on our YouTube channel. I don't respond to all of them, and we've got a team who respond to them. But one guy really annoyed me, so I did respond to him because he said I was just trading for the sake of it and encouraging people to lose their money. Now, if you watch any of our stuff, the risk, a very sensible risk management in place. So I did a trade on oil this week, even though I said I'd like to be patient. I'd like to be patient and wait for this trend to break. The trend is now starting to break. And the reason I do the trades in the videos is because it makes them much more interesting. So I've got a trade on oil, bought it at 95.60, market's 98.90, my stop is at 86. So it's up 100 quid so far for about 300 quid risk. And I think this is another interesting market to watch next week because the big trend for oil is still up. Okay, going back to those April 2020 lows, we know the big trend is up. I do not think we are going to see these 126 highs anytime soon. So I do still think for oil, it is still a bit of a flip-flop market, oil. But I did the trade earlier in the week because, we'd seen oil trade down to 88 middle of July and we were seeing a recovery. So I bought in and with a stop at 86, I think. So I do wonder, will we see a more gradual recovery next week in the price of oil? Because, I think what's interesting here, yesterday we had the US GDP second quarter contraction again, and oil's rallying. So we know that the US economy is slowing down, but oil doesn't care. So I think that's quite interesting that it's moving perhaps in the opposite direction to what many people would expect it to do, which can often be a clue that the market doesn't care too much about that bit of fundamental data. So for me, I'm happy to stay long on oil. I'd be a buyer of a dip still from here. I think 88 is a big level. If it starts trading below 88, I think the risk is for a deeper sell-off, but perhaps we'll see a bit more strength in here and then perhaps a move. For me, my first target is going to be 108. So the market is at 98, 99 pretty much today. I think there's maybe at least $9 left in this trade. I've got a stop in place. So let's see what happens with that one. So that's crude oil. Natural gas. Is natural gas still a crazy market? I must admit I haven't looked at it this week. Yes, it is. Now, I did say, didn't I, last week? I did wonder if this was going to happen. I didn't trade it, obviously. But I did wonder. It had this run up when we were looking at it last week. And I'd had an order in to buy and I've missed the fill. But I did wonder if it would struggle up here again. And it has. It's interesting that the last few days in natural gas, it shoots back up towards 950. The old highs that we saw in May and June and it started coming off again. Now, the long-term trend for natural gas is absolutely still up, going back a couple of years now. So I would be a buyer of a bigger dip, but it needs to be a bigger dip than this. So it's interesting that they're clearly at the moment in this market, there is not the conviction to take the gas price out to fresh multi-year highs again. So perhaps we'll see a bit more pressure on the natural gas price next week. So I suppose if you really wanted to trade it now, if you wanted to do an aggressive trade, go short at 820 with a stop above 960 or something, the old highs. It's okay, so it's $1, you'd have $1.50, $1.60 stop. But if it goes back to where it was beginning of July, there's $3 profit in that trade. So I think that's interesting. But I mean, natural gas, I'm sure if you watch it, you know it is a crazy market at the best of times, natural gas. But let's see. I wonder if we're seeing a rejection of those old highs and the market sells off again. See what happens. And Bitcoin. I haven't looked at this one either this week, but I mean that's still chugging the little recovery, you know, since June. Trend is still down on Bitcoin, so again, I don't think we're going to see 35,000 anytime soon on Bitcoin. But let's see what happens. You know, I think the test for these markets that are going against the bigger trend, the big test is if it sells off, where does it hold? Does it hold above the previous lows? That's going to be the big test, I think, for Bitcoin. But for me, the big trend is still down. So, to recap, the most interesting markets for me next week are these stock markets. Okay, so the S&P 500, because we know, we've had a year of lower highs and lower lows. I'm wondering, despite the strength over the last few days, is this market going to struggle again ahead of 4,200? So I think that's an interesting one to watch. The Nasdaq, of course, is the other one. Already, perhaps the first signs of it struggling up at these old levels. Let's call it 13,000 on the Nasdaq. So I think that's interesting. And I'd also say, not pound against the dollar so much, but I suppose that the dollar index, the DXY, to see, because that has been such a strong performer for 2 years now. It was only about 10 days ago, a couple of weeks ago, that it made multi-year highs. So I think it is too early to call for the end of that trend. So I think those are going to be the interesting markets to watch next week. Let's see what happens. Right, I'll jump into the questions and we'll have a look at some of the stuff you want looking at. So Devon Energy. Is that Devon Energy? Devon? Let's have a look. Devon Energy. I think this is one of those ones where we need a TARDIS to go back and buy it here. Buy it at 52. I mean, the trend is up, isn't it? Absolutely. I think we have looked at these before, haven't we? The trend is up. Pretty deep sell-off, but has held in the trend. So it's the old cliche, which holds true. The trend is your friend. So for me, absolutely be a buyer on dips. Loads of support from 42 through to the more recent lows at 50. So for me, if it sells off, it looks like a buying opportunity. That one we looked at. Dark Trace. Who's Dark Trace? Let's have a look at that. Let's have a look at that one. Cyber Threat Defense Technology Solutions. There we go. Do they sponsor a Formula One team, or am I getting them mixed up with somebody else? I'm not sure. What could you say about this? It looks like it only came to the market last year, and so we don't. It's not as if we have an awful lot to go on, is it? But I would say, we've seen it slide from the March levels of. Is this in pounds, or is it in? It looks like it's in pounds. Yeah, pounds. Okay. So it's seen it slide from £5.40 down to £2.80, so nearly halved. So, but actually, what it's doing now is positive. I would be patient. So for me, you could argue, the downtrend is over. I would wait for the sell-off. If we get a sell-off, how deep does it go? And does it hold above the 280 level. So I think 280 to £3, big level for dark trace. It is quite positive what's going on now. The price action, I would wait for a sell-off and see where the market stops going down, personally, but it is interesting. Telecom Plus, that's an old favourite, penny stock. Oh no, it's not a penny stock anymore, is it? But from way back, isn't it? I think I remember that. Hang on a second. Is it UK listed? Yeah, UK stock, multi-utility supplier. Wow, that's had a fantastic run, hasn't it? Incredible. Yeah, I remember it from these days. That's where I'm thinking of it from the 2000s, 2014. Wow, if you're in that, you'd be happy, wouldn't you? So, it's a big breakout. Cannot argue with the trend on that. I mean, that is a dream trend. The thing just goes up nearly every day, or has gone up every day for the last few months, pretty much. So obviously, the odd sell-off. Absolutely a buyer of dips on that one. It'd be interesting if we got a deeper pullback. The old highs were just shy of £20. If we got a pullback back towards 20, do we see buyers come back in who think they've missed out first time round? But, with it pushing out to all-time highs, looks like a great performer, doesn't it? So for me, I would absolutely be in a buyer on dips. I mean, we've made more than 50% on that since March. The benefit of hindsight. Harry Hindsight, the world's greatest trader. So, no, really strong trend, that. Telecom Plus. We did gold. Let's have a look at Palladium. I was going to buy that the other week. I don't think I've done any trades this week. Yeah, I think what I said about it last week, I think we were looking at it here last week, weren't we? And I was just wondering if that trend, or whatever it looks like, something like that, was over, because we had, and I think it would, I'd rather buy a dip again from here, but maybe I've missed it, but maybe not. But if I was a buyer now, I would absolutely want my stop the other side of 1760 or somewhere, those lows from June. So it looks positive to me, Palladium. It looks like perhaps it's past the worst, Palladium. So another interesting one to watch next week to see if it continues to build from here. Intel. Let's have a look at Intel. Oh, that's not good, is it? That is not a pretty picture, is it? So that's really just, it's been selling off now since April of last year. So it looks like that. So for me, the trend on Intel, absolutely down. Currently trading at its lowest price since 2017. So a 4.5-year low in Intel. We did have big lows back here at 30, 33. Something like that. It's 35 at the moment, but that has been, I'm guessing it had earnings in the last couple of days because it's been absolutely slammed, hasn't it? From 40 down to where it is now. So for me, the trend is still down. The risk is it's going to go lower. I suppose if you absolutely wanted to do a counter trend trade, you could be a buyer and put a stop loss under however low it's been today, but it's not one for me. I think that trend is absolutely still down. What about sugar? Sugar UK. It's been a good market for me, sugar, over the last few years because we do have quite good trends, and it's quite a calm market to trade. Obviously, if you put sugar in a 5-year-old, you don't get a calm reaction. But I think from a trading point of view, it's got quite a nice little ebb and flow, the price of sugar. So for me, I'd say absolutely there's an argument for being a buyer of sugar now. This is UK sugar. The other different types of sugar are available to trade. For me, I would put my stop, the closest I want my stop would be the other side of $500. Is it dollars? No, $5, whatever it is, 5. Perhaps the more patient thing is to wait and see if it sells off next week. Do we get a bit more stability? A better stop is probably the other side of 480, something like that. I don't know, but it looks the trend is still up in sugar, isn't it? Since mid 2019, so we're almost 3 years into this trend in sugar. So I would still be a buyer of the dips. Iron ore. Let's have a look at iron ore. Do we cover iron ore? I think I always ask that and I'm never sure. we don't have much data, do we? So we don't have hardly any data. We only started covering it in April. So I don't know. It's a bit of a tricky one, that, isn't it? I suppose if I had to do a trade in it, I would go short. The closest I want my stop, the other side of 800, maybe even the other side of 850. But I would be leaning to the view that this is just a bit of a bounce before the thing sells off again, personally, for me, in iron ore. But it's not as if we have a lot of data to go on there. So just working with what I've got in front of me. I appreciate your work. Thanks very much. Can Apple continue up? They had earnings last night, didn't they? Apple. Was it last night? I think it was last night. Absolutely, I think. I mean, for me, I think we've looked at these before. You know, if you go back, there are uptrends all over the place in Apple. And again, I'd probably rather buy a dip. I think the problem is we've seen such a run in markets the last 2 or 3 days. I find it quite difficult to get in on some of these. But for me, if I was looking at Apple now, I'd want to buy a dip because the trend looks something like that since June. So absolutely be a buyer of dips in Apple. But I probably, personally for me, I wouldn't want to do the trade here. I'd rather see if it sells off. And of course the risk is that it doesn't sell off and the thing just carries on up. What do you think about the current gold price? A lot of people saying it's cheap. Well, we did cover gold. I mean, people say it's cheap just because it's fallen. You know, it was, I'm sure people were saying it was cheap when it was at 1800 as well. For me, it's whether it can sort this downtrend out. So I don't really care whether it's cheap or expensive at the moment, but it needs to come out of this downtrend. So I'm quite happy to be a bit patient on this. I had a general question. If the contracts are rolling and non-deliverable, in the case of spot FX and spot metals, then what am I profiting or losing? I always found that confusing. Okay, well, if you're a retail trader like me or you're trading a CFD, so the same contracts for difference. So the same way, if I buy gold now, I'm not actually buying the physical gold. I'm buying a CFD based on a contract for difference, based on the price of gold. So all the stuff we trade as retail traders, if trading CFDs or spread betting, we're trading a thing called a CFD or a spread bet that just mimics what's going on in the underlying market. So we don't need to worry about taking delivery or making delivery of the physical. So it's, whether you're trading gold, the FTSE, pound against the dollar, oil, you're not going to have to deliver oil barrels. You're just trading a thing that's a derivative that is derived from the underlying market. So it makes it a really easy way of trading. When I first started trading in the mid-90s, I traded futures, and there was always the risk there of having to deliver if you didn't come out of the contract at the right time, So it was, but because these are CFDs are all cash settled, you never have to worry about that. Can we have a look at Nvidia? Nvidia, sure. That's the what do they do? Graphics cards, isn't it? I'm guessing they're going to be suffering from the old supply chain thingy, supply chain constraints. Would you buy Nvidia? I wouldn't buy it personally, because I think I would make the argument that the trend is still down on Nvidia. If someone really wanted to buy it, I suppose, because for me, it's not even taken out the highs from early June. Yeah, so Nvidia, I would be looking to go short. I'm going to do that. We're going to go short Nvidia. So I'm going to take the view that these old levels for Nvidia, particularly if the Nasdaq starts rolling over, that these old levels are going to be a problem for Nvidia. So we've got 200 to 204. We'll go, what should we go? 210 for a stop. Make the numbers easy for me. So I'm going to sell them with a stop at 210, and we only want to risk losing 100 quid. So we do 4, yeah. So we're going to sell 4 Nvidia with the stop at 210, because I just think even though it's had a bit of a run this month, the trend is still down, and we have some real problems, I think, coming up here. Let's see. Let's see what happens. Sold 4 Nvidia. So yeah, so for me, I still think this is a bit of a dead cat bounce at the moment in Nvidia. And it's not going to get above 200. But let's see. Let's see what happens. XLU, no idea what XLU is. If you could tell me what that is, because whenever I type the code in, I think I end up with the wrong one. Is that the right one? Utilities sector? I'm going to guess that's what we're after. Utilities Select Sector Spider Fund. So it's the ETF. It's the exchange traded fund. For me, it's a bit. It's neither one thing nor the other. For me, I mean, it's outperformed the market, obviously the broader market, obviously this year, because utilities are a safe defensive thing, defensive play. But I mean, I could even be tempted to go short here, because particularly if stock markets go back to being more risk on and embracing risk again, I would guess that some of these utilities might start falling out of favour. So I wonder if it's going to manage to get through 75, 77, this one. So the problem is there isn't, you're looking at it here, same as me. There's not a trend there, is there? It's all a bit sideways, and we're pushing towards the top of the range. So for me, I'd be tempted to be a seller. But if you took the longer term view, and we've only got data going back about a year and a half, the trend is just about up. I mean, clearly the time to buy it, again, it's our Harry Hindsight trade, back here, down at 65, when it came down to the old support. So for me at the moment, it's a bit too much in the middle. Interesting to see if it starts to roll over next week, the old XLU. Okay, let's see. Glencore. It's tricky, isn't it? Now, it's a tricky one, this one for me, because the trend is absolutely still up. The UK listed mining company, enormous mining company. Where's the trend line? Oh, actually, it did come right down. Okay, I'll be a buyer then. There we go. That made that easy. So I would be a buyer. The only question is, would I buy it now at £4.61, or would I wait for some weakness? I'd probably wait for some weakness, because we've had the first bounce off this trend. So I'd wait for some weakness. Interesting one for me if it turns a bit lower next week and it holds. But absolutely, that trend on Glencore, going back to January 2021, on that trend is absolutely still up. We had a look at copper last week, quite a bit of profit already. I remember that now. I forgot about that trade. Oh yeah, so there is a trade. So what did we buy it? So we bought it at 337 with a risk of 100. So we're up 35, 337. Because it was the aggressive, the markets overreacted trade, wasn't it? That's what it was. I would be wary of that absolutely collapsing again, though. But it's interesting that it had gone down in a straight line, and we've seen something of a bounce back. It's only a tiny bounce at the moment, isn't it? But again, I think with copper, if it sells off, does it hold above the old lows? That's, for me, probably the more interesting trade at the moment. But we did do that trade last week. What else did we do last week? What was the date last week? 22nd of July. So what else did we do on the 20th? Maybe, did we only do one? I can't remember. Maybe we got stopped out of some stuff. Who knows? Pound against the dollar. That trade is making money. The one we just did. Up £14. It's almost as if occasionally I do know what I'm doing, isn't it, with this? Only very occasionally. But yeah, copper's interesting. If it sells off and holds above that low, 313 low. Let's see what happens. Nifty 50. Do we cover the Nifty 50? Let me have a look. The Indian market. There we go, the Indian 50. Let's have a look at that. Have a look at this. We don't have much data, unfortunately. We've only got data for this year. It's a little bit, again, for me, it's a bit stuck in the middle of the range, isn't it? So for me, I'd be tempted, because we made a low in June, a bit like the argument for US stock markets, although the trend is a bit different than US stock markets. I think perhaps the risk is it starts to run out of steam, but we don't really have a lot of data for that. So there's not a lot I can say on that one, unfortunately. Alibaba. Can we look at Alibaba? Alibaba was one of our Capital's most traded stocks in the second quarter, I think. Have I got a trade on Alibaba? Hold on a second. Yeah, I'm short. It's been short since the 17th of June. Okay. Alibaba. I must admit, I would still be leaning to selling short Alibaba. Because even though, okay, it's broken out of the trend, it's not really, there's this real problem area from 120 to 130, and it's gone into it in June, it's gone into it in July, and it's fallen back again. So for me, I'm short at the moment. I'm quite happy to stay short Alibaba. But if it sold off and we saw it hold above these old lows at 71, it's quite interesting for a short-term trade. So for me, happy to stay short. Still under pressure today. Let's see what happens next week. Does it hold above 70? Let's see what happens. Gamestop. Gamestop is, if you've made money on it, great. But it is just, it's a ridiculous stock, isn't it? I mean, what's happened? What's happened here? Why is that done? That must have done some sort of consolidation, I'm thinking, isn't it? Has it done a share split, GameStop? Because that doesn't look right to me. I don't think it's fallen off a cliff. It's done a share split, and we haven't adjusted for the split yet. So I can't. There's not a lot I can make of that, to be honest. I'm just trying to see if I can find it somewhere else. No, I use another platform, and that hasn't adjusted yet. But GameStop, it's just a boring stock. It's not boring because it moves around, but the game is over on GameStop. You know, the craziness is over. The craziness was obviously, January last year. I just think it's just a stock that attracts people that hope one day it goes crazy again. So it's not one for me, to be honest, GameStop. But when we adjust our charts, we'll have a look at it. Let's have a look at it at some point in the future. What do you think of Platinum? Platinum. Let's have a look. I mean, to me, that still looks weak. I would argue it still looks a bit weak, Platinum. I got stopped out for a loss on Platinum when it broke down. So to me, it did break these lows, September 2021, December 2021 lows. So for me, I would be looking to be a seller into strength on Platinum. I think the trend is still down. Glencore reported this morning they were mining less copper than expected. Oh, okay. Tesla is skyrocketing. Is it? Let's have a look at Tesla. I should let you know, actually, I won't be doing these things much longer because I'm going to be leaving in mid-September. So we've only got a few more of these things left. But I'll be doing some other stuff after that, so I'll still be around there somewhere. Tesla is rocketing, isn't it? That is a move in Tesla. I think when we were looking at this last time around, we were looking at the $600 level is, quite a level on Tesla, and we've had this bang, 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 bang. And this is what I mean, when we've looked at some of these stocks today where they've raced away, the interesting thing is the retest, is when the market comes back, as Tesla has done, does it hold? Does it hold above the lows? And we've seen that on Tesla. So there were quite a few opportunities on Tesla for having a low risk trade there with stops either side of 600. So again, for me in Tesla, absolutely a buyer on dips. If the market sells off from here, where does it hold again? And buy the dip. But still looks pretty strong to me, Tesla. So that's it. So I think that's it really. We're going to start wrapping things up there. Like I say, stock markets for me next week, where do they go? Do we carry on with the crazy rally, or does it hit the buffers? I think I've made it pretty clear. I think it's going to be hitting the buffers next week, but it will make for an interesting week. We'll wrap things up there. As usual, to find out more about the company, Capital.com. Any questions, drop me an email, david.jones@capital.com, and you can follow me on Twitter @JonesTheMarkets. And jonesthemarkets.com to find out a bit more about me and my trading approach, and make sure you follow us on YouTube, Twitter and Facebook. I will still be around for another 6 weeks, so I think we've still got some more live streams together we can do with these crazy markets. But we'll wrap things up there. We'll do it all again next Friday after the payrolls. Enjoy the rest of your day and your weekend. Thanks for coming along. Always enjoy doing these, and